Hello, everyone. Grayson Geiler here with SES Services. Weekly, I like to do a market update, find something out there in the financial press, and go a little bit further into depth. This week, we're going to talk about earnings season about to kick off and crude oil. Okay, so last week we finished up the first quarter. The first quarter of 2023 ended pretty strong when we're talking about asset prices, stock prices, bond prices. Had a pretty good rally last week. Now, coming into earnings season this week, one of the reasons for, excuse me, the strength in bond and stock prices last week was because earnings are expected, and we're talking about S&P 500 in a broad general terms, earnings are expected to be significantly lower than last year, 4 to 5% lower. So now we're sort of in that weird quandary where bad news for the economy is good news for asset prices, because it means that the Federal Reserve isn't going to have to continue to raise interest rates. So if bad economic news comes out in the form of lower earnings out of the S&P 500, people are thinking interest rates will stop rising, maybe even come down, so let's buy asset prices. Strange quandary, but we've seen it over the last couple of decades quite a bit. Now, one of the things that is really meeting the radar this week is crude oil, because we had OPEC come out over the weekend, and they decided that they're going to lower the production of crude oil. Now, crude oil consumption worldwide is in the ballpark of 90 million barrels a day. They're talking about Saudi Arabia, and they're calling it a volunteer program, but most of the big OPEC producers are going to reduce how much crude oil they're producing. So we're looking at something like 1.6 million barrels a day in lower production. And again, we're talking about a marketplace of about 90 million barrels a day, I think. So that's not a huge number, but all big price movements happen on the periphery. Just a little bit of that extra day-by-day margin is going to go away. So you're looking at a chart of crude oil here, a little longer than a year. Prices have come down significantly since the initial fear, shock, and awe of Russia invading Ukraine. A year goes by, and lo and behold, look at what's just happened in the last couple of weeks. Crude oil trading significantly below 70, starting to come back up as news comes out of the Saudis preparing to dump this news on the world. The news comes out, and bam, here we go. So crude oil is up significantly today, ballpark of $5 over Friday's close. And that's a concern. So obviously, when we're talking about the Federal Reserve, it has a lot to do with driving the marketplace, driving stocks, bonds, commodities, the economy itself. What the Fed is going to do is obviously of big concern. So crude oil being such a big input into the world economy, higher prices makes us think that inflation might continue. So people, of course, the flip-flop, maybe the Federal Reserve is going to have to continue raising interest rates. That gets into all kinds of different discussions. Higher interest rates means that oil and gas research, oil and gas exploration, harder for them to get money with higher interest rates. So they're going to stop producing more crude oil. Crude oil prices keep going higher. So it's a strange feedback loop. But I'm just telling you what the initial reaction of the marketplace is. This morning, stock market down significantly, at least on the NASDAQ side, the high tech side, because of higher crude oil prices. Well, one of the things that the U.S. has done for decades is that we developed the Strategic Petroleum Reserve, and that at its height, it was roughly 700 million barrels of crude oil just stored for strange economic times. Obviously, last year, when the Russians invaded Ukraine, by some measures, Russia's the largest exporter of energy on the globe. So they're invading Ukraine. Of course, people fear the supply of energy. Crude oil ran up, as you see on the chart here, after that invasion, $130 a barrel. Biden administration released some of the strategic petroleum reserve, taking down something like 250, 260 million barrels of crude oil came out of the strategic reserve to fight the higher prices of crude oil. And as you can see, as the last year has gone on, crude oil prices have come down significantly. Now, the question is, well, if we're depleting our strategic petroleum reserve, all these strange economic situations going on, when are we going to replace those strategic reserves? The Biden administration came out in December. They were saying, yep, when crude oil is $67 to $72 a barrel, I believe was their statement, we're going to replace the reserves. And as you can see here, that has yet to happen. So we're looking at the Biden administration about the invasion of Ukraine time, starting to release petroleum out of the reserve, and it hasn't come back yet. So a little bit concerning, just one of those cracks in the dam that we are looking for. Crude oil spent significant, let me go back to the chart. I mean, crude oil spent significant time in that $67 to $72 per barrel range, about a month actually, and we haven't replaced any of the reserves. Going forward, it's just something to keep a look at. If the reserves if we have to chase the price of crude oil higher, replacing those reserves, that's a concern. That'll exacerbate the move and make it stronger and faster and more expensive to consumers. Or if we're not even going to replace those reserves, that's a concern too. One of the things that I noticed just looking at the Energy Department's website, they haven't even updated the explanation page of the Strategic Petroleum Reserve. In the second paragraph, it says the most recent withdrawal from the reserves was 2011. So it sure looks to me like someone is asleep at the wheel with the management of the Strategic Petroleum Reserves. That's a concern going forward. But again, like we've been talking about for the last couple of months, the economy's holding together remarkably well with significantly higher interest rates. We're not trying to say that we think that's going to go on forever, but it's obviously worthy of note that some of the fears have been overblown. We'll see how earnings season comes out. Earnings season could obviously significantly alter how stock and bond prices are performing. So if you do have too much risk in your portfolio, always need to make sure you're managing that and readjusting. Make sure you own some gold along the way. Hey, if we can help, feel free to reach out to us. Here's our contact information. You're looking at the YouTube page, smash the like button. Feel free to forward this to anyone that may be interested in what we're doing. And we'd be happy to sit down with you for a free consultation, no obligation consultation. Just reach out to us if you need some help, and we'll go from there. Hey, thanks for coming. Hope you enjoyed what we put together today. Excuse me, and we'll see you next week.